Hi everyone, I welcome you to a money date from a very, very special place. I hope you're gonna like the scenery because I do. And we are talking about, I'll give you a little bit of a tour once we finish with our discussion. But today, and happy Valentine's Day to everyone, I wanted to come on, and it's actually funny because I named this show A Money Date, and it happens that it's Wednesday and it's Valentine's Day. So how can I, over the last week, we need to talk about where the spending went, right? Because we're keeping track of it. And we need to talk about earnings, right? So I am in beautiful Mexico, Punta Mita to be exact, for a conference for Yuri's work. And it is amazing what these people do. Yuri is in commercial real estate, and so his company brought over, I think, 300 agents from all over the country, the ones that did really well. So this is a kind of a treat place, but it's awesome to be around those people that actually think big and really work hard in earning their money. So I bet you that the discussions that I will have this afternoon, there's a Valentine's Day party, are going to be around those questions. So again, this is a reminder that we need to stay on the top of our finances. Now, part of a money date is actually to learn something new. And I've got a very exciting topic because I wanted to kind of tie it into this whole theme of Valentine's Day and love. And it does not have to be loved. Doesn't have to be love for your significant other. It could be love for your family, for your friends, for your kids, for your parents, your siblings. It's really anything. I view love is the antidote for all the bad things. So with that in mind, we're going to dive into a deeper discussion of how do we protect those who we love. And this is one of the area in financial planning, and you guys know that's what I do, where a lot of people are, let's put it this way, they could do better. Okay, I'm not going to go into details of what all is missing, but let's say that they can do better. And so I'm here to educate you and inspire you to do better with that part, because there's a lot of things that we're working on already on a daily and weekly basis. So again, thanks for hopping on. Hi Jane, hi Jack, good to have you guys here. I know it's a bit of an off with the time, but I hope that you get to have a money discussion, a money conversation before you head out on the real date. So remember, that should come first. Okay, so once I get into the topic, but I want to cover this one area with you. I always been talking about gratitude. This is kind of the core of what over the last year has shifted a lot for me. So I want to remind you to reflect and think back about what your money wins have been. So one, for me, obviously, is coming on this wonderful vacation with Yuri and celebrating his achievements, right? That he's put a lot of hard work over the last year and being recognized as one of the top agents in the country with Marcus & Millichap. So I am excited for that. So that's my money win. So it's not, again, it's not always about you. It's about appreciating and understanding how things are with the ones that you love. So today is the day perhaps to reflect back and celebrate those kinds of achievements. So let's get into the actual topic. Now, I am talking about life insurance. That's the topic of our today's discussion. Protection in the form of insurance, okay? Today I want to cover life insurance because it's one of the areas that I think, regardless where you are in your life phase, and you guys know I work with clients with all kinds of in all kinds of age brackets, right? It's not just young clients, it's middle-aged, it's clients who are getting closer to retirement. So it doesn't matter. The question is, do you actually need to have that type of protection? I talked about this earlier in the week, is understanding what is the risk that you are carrying if you do not have proper coverage. Now, I do not sell products, so I wouldn't be able to offer you a policy. That's for others out there who do not do what I do, but I want to educate you and provide you with tools to be able to make those decisions, okay? So again, it comes down to hi Dana, good to have you here. It comes down to understanding what are the needs of your family. Okay, so I'm going to talk about the why, the how, and the actual how much do you actually need? Because that's the biggest question that a lot of clients I have wonder about. Okay, so let's talk about why. And so life insurance is designed, right, to provide various kinds of things such as income protection and replacement, right? This is if you're not here anymore, so think about your family. It covers funeral expenses, right? So some of us carry a small tiny policy just for that day. It provides for those of you guys who are business owners, right? This is how actually my partner Jim and I structured a deal when I bought Main Street Financial Planning from him. We had a life insurance policy in place and a special agreement called buy-sell agreement surrounded that. Hi, Carol. Good to have you. So that was one way to utilize life insurance to make sure that the interest of your family, okay? So you guys, the biggest thing that you take away from this conversation, that it's not for you, okay? Life insurance is for someone you actually love and care and have responsibility to, okay? Just remember that. It pays for estate taxes. For some of you who have to think about larger estates, right? Hi, Emily. And transferring that estate to the next generation, that's a tool to utilize. But I think for most of us, understanding that in case we were not here for whatever reason, right? Hi, Larry, good to have you. Then the life insurance that's going to be available to our family is supposed to replace our income. And I'm going to go into talking a little bit about how do you determine the actual amounts and the needs. But right now, this is the actual why. That's it, my friends. These are just a couple of reasons why. And I don't think you need to have a million of them. It's just really thinking through, have you got yourself covered enough, okay? Now, I want to talk about the actual type of life insurance, right? Because I think there's a little bit of education and understanding that could be made. So there is a permanent life insurance. So if you think about your situation, do you actually have a permanent need? A permanent need may be something that will actually never go away, right? But I think when I look at my clients, most of you have a temporarily need, or that means that we probably need to have coverage for the term of that period. So is it 10 years? Is it 20 years? Is it 15? Is it 30 years? What's your spectrum? Or if you say, all right, Anna, I've got a need for the rest of my life, then we're talking about two different types of life insurance. It is priced accordingly, right? Generally, term insurance is less expensive because think about this, life insurance companies are on the hook for only a certain period of time, right? And so once that's over, we're done. It's kind of like you've paid for the coverage that you actually never going to use, which is okay. So get comfortable with that. This is exactly how automobile insurance works. This is how homeowners insurance works, or renters. This is the coverage that you almost hopefully never going to need to use. So think about what is it that you're trying to protect, right? Permanent life insurance gets into the sort of the other side of the fence where we talk about it in terms of investments. But I'm not going to go there today because this is more advanced and complex topic. If I could get you covered, right, just for the basic needs in terms of term coverage, I guarantee you're going to be in just the right hands. All right. So we've got the whys under the way. We understand the types of coverage that we need to perhaps consider. Now, these types of policies are available everywhere. Your employer provides the coverage, you can buy them on your own, so you have the marketplace to go and generate the coverage, right? And ask for somebody's help to help you figure out. So I want to empower you and educate you. How do you actually look at figuring out what does your family need, okay? Because that's really what we're trying to ensure, your family's needs. Okay, so the big question is how much? How much insurance do I need, Anna? That's the question that I get frequently and often enough. They say, all right, are we covered here properly, or can we just add more? Now, I do like the idea of having private coverage, because what happens if you leave your job? That means the coverage goes away with you. Or, I'm sorry, that means that the coverage stays and you leave. But if you have private coverage, that means that you actually can take it with you. So there is that kind of sense of security. And the other piece about that is that you are the one who actually going to be underwritten for this particular coverage, right? So it's not when you buy the insurance in the group settings, yes, you don't have to do the exam, right? History and physical medical exam, but, and it's easier to get some kind of amount, but when you, again, leave, that puts you in a different risk category, because things always work like this in life, right? When you don't have proper coverage, shit hits the fan, right? Excuse my French, but that's kind of how it is. So how much do we really need? And the answer is it really depends. And I'm going to teach you 2 ways how I look at it so that you can start actually thinking it in those terms. Now, the very first and most popular way, so you can just Google this and say, I need life insurance, and some calculator is going to come up and they're going to ask you for your income. So it's called multiples of income. Now, life insurance companies put out a specific table that lists your what they call income factor, and there's about maybe 5 different income factors based on the specific age bracket. So if you're like in the 20, if you're in the 20-year-old bracket, 30-year-old, and so forth. So it kind of goes up to, maybe age 65, because after that it becomes quite expensive for them to insure you. So their needs tend to be less. So let me give you an example. So multiples of income means if let's say you're making $100,000, just to use round numbers, $100,000, and let's say you're 30 years old, which is typical of my clients, right? They're in their 30s. So you say, all right, I make $100,000, and according to this calculation, right, we look at the table and say, okay, so multiples of income is 25, so that means we need $2.5 million coverage on you. And you say, all right, well, that sounds like a reasonable, right, explanation and calculation. And I don't disagree with that. But when you look at somebody who is 30 years old and making $100,000 but has no family independence, why do they need to carry $2.5 million worth of life insurance? That's the question. But when you look at another person who is about the same age and makes the same amount of income, but all of a sudden they've got 2 kids and a house and a wife that they're responsible for, now that equation looks all of a sudden very different. So again, multiples of income is a great way to look at it and sort of use that as a general idea. But I want to teach you something else. I want to teach you something called a capital needs analysis. So it's the same idea. I'm going to use the same example so that you can follow. But looking at a family, right? Let's take a family or an individual who actually in the same age group makes the same amount of income but has dependents, right? So you start looking about and thinking about what their needs are, right? And when you have dependents, there might be, again, because life insurance is designed primarily to replace income, right? That's going to be missed. So that's the first one. Hi, Richard. Good to have you here. So when we're looking at their situation, number one factor is income. Okay, so how much income do we need to replace? If this is a young family with kids, we need to think about a college fund, right? We need to think about retirement for them, and also what are the abilities and ways that the spouse, right, who's going to be left behind, what are their abilities to make income? So that's a big question there, because that if there's not as much, then we need to add more to our calculation. So we list all of those variables, right? And we say, okay, so we need to replace income. We need to have a college fund. We have a mortgage, right? So we need to have that on our list. We add all of these numbers and then we come up with the real calculation. So I can make up some numbers, but let's say it's actually $2 million when we do the calculation and say, all right, well, this is the same client that we just used is an example for multiples of income needed $2.5 million. Now they need 2. So here's the difference, okay? Now, not only you are not paying for more insurance that you need, but you actually have thought through, right, and calculated how much precisely do you actually need. And I've got one more interesting concept here, because getting a $2 million policy, right, for the next 30 years is going to cost you quite a bit, right? It's not overly expensive. And again, if you go in the private route, it depends on some factors, right? Primarily depends on your health and your habits. Do you smoke? Are you overweight? Do you exercise? All of those things, again, all those things are correctable. So don't think if you're in a bad shape and that's kind of preventing you in doing that. Get the insurance now, because you can always go back and ask the insurance company to look at you again, say, look, I've dropped 20 pounds, or I don't smoke anymore, or whatever health conditions have changed. They can negotiate the terms of the contract with you and hopefully lower your premium. Now, the last piece that I wanted to cover, which is an awesome concept I've learned a while ago, which allows us, so in that same example where we need to have $2 million for our family, but if you think about this, family doesn't quite need to have $2 million for the next 30 years, right? Because they have small kids right now, for example, so their needs are going to be really maybe for the next 15 years that are pretty intense. Because once kids are growing, they're off on their own to college or doing things that they want to do, then why does mom and dad have to carry that kind of a coverage? So what I'm getting here to is a concept called layering. So it's kind of, if you've ever bought CDs, for example, at the bank, and you bought one CD that was maturing at 5 years, the next one was maturing at 3, and then the next one was maturing maybe at year 1 or 2. So it's kind of like you've got these layers. You can do the same thing with life insurance, which is pretty neat, because what it does, it's not putting life insurance company, right? You could do this with the multiple insurance companies, so it's even better, right? That you're not quite putting all of your eggs into one basket. So you would get, let's say in the same example of $2 million, let's break it down. So we're gonna get $500,000 for 30 years. We're gonna get another $500,000 for 20 years. The step below would be another $500,000 for 15 years and maybe another $500,000 for 10 years. So you've got 20, 30, 15, 10, right? Or some kind of a breakdown like that. So in aggregate, that probably saves about a good amount of, and I've heard this from a few of my colleagues, and I'm not gonna, don't quote me on this 100%, but probably a good amount of 20% or so in savings on premium that you're gonna pay for a very long time. So do you see, when you actually sit down and it's like almost like a little puzzle and you solve it and then you spread it out and you look at it and you think through, it becomes a much, much easier and clearer decision in terms of thinking what is it that you actually need to get. Now, if all of this just seems like over your head at the moment, just think about just maybe a small, tiny protection, right? Just take that first step in getting in the right direction, okay? You can always circle back. Like Yuri and I got a certain amount of life insurance in place and we don't even have kids yet, but we thought, okay, because when we're younger, it's much easier and much cheaper. So when the family comes, we're gonna get another layer, right? And then we're gonna think about more and more and more. So that's kind of where I'm getting at. If you are already in the shoes where there is a need, let's talk about it. Let me know what questions you have. Again, I don't sell insurance policies, but I can put you in contact with folks who are gonna give you the best service and provide you with quotes from the best providers, right? Because you also need to make sure that insurance company you're buying policies from, so not just because it's cheap, but it needs to be a reputable firm. So that's kind of what I think about life insurance and protection when I think about covering and protecting the ones that we actually love. So hopefully this was a good food for thought for your Valentine's Day. I've got a cute quote before I head out, but let me know what questions you have. When you hear and you're watching a replay, say hello and say something, drop a note in the chat. That way I know you visited. If you found this useful, please share it out. I'd love for others to learn and be better with their finances. So here's my quote for this wonderful day. As Beatles used to sing, is all you need is love, but a little chocolate now and then wouldn't hurt. And this is a quote by Charles Schulz. So I hope that you eat a lot of chocolate or a little chocolate, whatever your preference is, but have a wonderful Valentine's Day. If it's not a person of your choosing that you haven't said I love you yet, reach out to them. It doesn't have to be your spouse or your significant other. It could be your parents. It could be anyone that you actually love. So I do love you guys. Thank you for watching, and I'll see you next week.